Good morning, everybody. This is Sheila for 3 Minutes Bryan College Station. Mitchell Cleckley from Interloop Loan. How are you doing this morning?
Great. How are you, Sharon?
Doing great. So today we want to talk about qualifying for a loan to buy a house, and the best way to go about that. And then if you're having trouble, maybe your credit score is not what it should be, we have some tips and hints on things to do. So what are the steps people go through to get pre-qualified when they go buy a house? That's always the best first step, is to get pre-qualified so we know what price range to start in.
Absolutely, and I can't emphasize it enough how important it is to speak with a lender before you go out shopping, just because you don't want to waste your time, you don't want to waste the realtor's time and looking at things that are outside of your price range. And then what we find sometimes is people shop in a higher range and then find out they're only pre-approved for a lower range. So then when they find a house, they're always thinking about, they're a little disappointed because they can't buy that bigger house. So so the first step would be to talk to a lender. Just fill out a quick application. We'll get a credit report. And that's what we're going to focus on today, is how your credit score affects your ability to qualify. But there's two big things about that. It gives us your score, but it also tells us what your debts are, because your debt to income ratio, which is your total debts and proposed housing payment divided by your gross income, is one of the qualifying factors for a loan. So talk to a lender, fill out an application, get a credit report. And then there's a difference between a pre-qualification and a pre-approval. The pre-qualification is just based off of what you put on, what the borrower puts on the application. The pre-approval, which is much stronger, much more credible, is that the lender has verified income, verified assets, verified work history through a series of documents, which we will send out a needs list of documents that include pay stubs, W-2s, bank statements, things like that, so that when we send out a pre-approval letter to the realtor, basically we're, as much as we can, guaranteeing this person looks great, is going to follow through and be approved for the loan. And when a seller is looking at, is somebody pre-qualified versus pre-approved, they want to see the pre-approval so they know that they've been verified, so there's no chance it'll fall out.
Right. So if you're really serious and you are ready to buy, the best option is to get a pre-approval. It's a little bit more on the front end, but it makes your offer more attractive to a seller, and it saves you a little time once the ball starts rolling and all the other things start happening with buying a house.
Yeah, you're absolutely going to be in a much better position doing that.
Okay, so credit score makes a difference on the interest rate that you pay, right? So we want to have maximized credit scores, and some life happens and bad credit scores happen. So let's talk about some ways. Talk about the credit score, like which credit score means the most when you're looking at them. There are the three big ones, that everybody looks at, but which one means the most to you as a lender?
Okay. Yeah. So when we pull a credit report, we do what's called a tri-merge report, which means that we pull from Equifax, TransUnion, and Experian. And what we use as a qualifying, and what most lenders use as a qualifying credit score, is the middle one. It's not an average of all of them. It's the middle score. So whichever of those three falls in the middle, it's the median score. That's what we use. And if you have more than one person on the loan, we have to use the lower of the two middle scores for qualifying.
Okay. So what are some of the biggest mistakes people make with their credit that gets them in like bad situations, or, the worst things that are demerits on their score?
Absolutely. The worst thing you can do to your credit is get late, not pay your bills on time. So once you get out of 30 days late, the credit bureaus will hit you with a 30-day late, and there's a 60-day and a 90-day. Those are really hard to overcome. They stay on your credit report for an extremely long time, and they will destroy your credit score. So the number one thing is make sure you're paying your bills on time. The other big mistake that some people have is they have no credit history at all. We talk to people a lot who have never had a credit card because they just do not want a credit card, and we understand the dangers of having credit cards, but they also are a great tool to build credit, or they've never had an opportunity to have an auto loan for an installment or a mortgage or things like that. So we see some people will apply, they have absolutely no history, so there's no score, and unfortunately you can't qualify for a mortgage loan if you do not have any kind of history.
One thing I've told people before, my kids, starting with my kids, but a few other people, is just get a card that you put your gas on or your groceries on and pay that off each month. That's a good way to get something started at least. And if you have a low limit on it, when you just put those things that you buy anyway all the time and just pay it off, you can even go to the grocery store, put it on your card, and then pay it off, just so you're showing, money going onto the card and coming off of the card and keeping ahead of it.
Yeah, we always encourage people to have at least one, maybe even two small credit cards, just so you can build credit history quickly. And I understand the Dave Ramsey school out there that says do not use credit cards and use cash for everything. We understand that. I have a background in ministry, so I went through that class and everything. But credit cards, is otherwise known as revolving credit, is one of the best ways or best tools to build a positive credit history and to show that you're disciplined and that you also are using them responsibly. And so they will have the biggest impact on it. And what we encourage people sometimes, if you have a low credit score or have no credit score at all, you can get what's called a secured credit card. There are companies out there that issue secured credit cards, which basically means you put down a deposit and that serves as your credit limit. So you can put down $500, that's your credit limit. And we encourage people, like you said, go put a tank of gas on it a month, or put a load of, bill of groceries on there a month. Let the credit card cycle, meaning let your bill come out and then pay it off. This is a mistake that some people make because they don't like any debt hanging over their head. So they will get a card, they will put $50 in gas on it, and 2 days later they'll go pay it down or pay it off. You don't want to do that.
Yeah, that makes sense. So it shows up. And so what about say some medical event happens, and medical bills can be huge, and insurance being what it is these days, it doesn't really cover all that much. If a person does have collections, what are the best ways to kind of tackle those to get them off your record? Like I know sometimes you can call and they'll reduce the amount that you owe and then you make a payment plan, or there are things. What's the difference between a charge off and a payment plan, or is it best to just pay them in one chunk? Or what's your advice on taking care of things that are hanging out there as far as collections?
Well, first of all, on the medical side of things, we understand that things happen. And fortunately, on a medical collection, we do not have to count that debt against you. Now, it does hurt your credit score. There's no way to prevent it from affecting your credit score. But we have people all the time that have medical collections that can still get pre-approved for a loan because we don't have to count that debt against it. So medical is a little different than other collections. But one thing that's important for everybody to understand about collections, and a lot of people don't know this. So we always advise people, do not pay off a collection unless you can get in writing that they will remove it and delete it from your credit report. It's called a pay to delete, but you want to have it in writing because you have no standing. If you pay that thing off, they will show it, the balance going to zero, but they have no motivation to go and pay. The company has to pay to update that report and have it removed. They have no motivation once they have their money. So here's the other thing about it. On a collection, there is a date on there called date of last activity. The further you get away from that date of last activity, the less it affects your credit score. If you go out and pay a collection, say it was on there from 2015, so 5 years ago, you go and pay it off, they reduce your balance down to zero, it updates that date of last activity to 12/20/2020. And it's like hitting your credit score again with another collection. So you have to be very careful. Speak with a lender, somebody's experiencing this. Do not pay off collections unless they will pay to delete it.
That is awesome advice. I did not know that, but that makes total sense. It doesn't do any good to just pay it off without having it removed from your credit card. So everybody pay attention to that and call the I don't know. Would that be the collection agency? How do you find the number to call someone to make that happen?
Yeah, once you have a credit report, they will list who the creditor is. So they sell it to a third-party credit collection company, and you can reach out to them. And what we tell people too is, hey, it's not going to hurt to reach out to them multiple times. So if you don't get anywhere with a collector, you can hang up, call again, and you'll likely get another person. Sometimes it just takes, you know, the right person pulling on the heartstrings to say, okay, we'll work with you. I know a lot of them are trained to play hardball, and some of them just will not budge on it. So then we advise people, hey, if you can't get anywhere with it, don't pay it off. I mean, because it's not going to help you. It's actually going to hurt you in the long run. Okay. One thing I want to say, Sherry, too, that is a big mistake about credit is people going out and closing accounts. If you close a credit card account, even if you haven't used it in 5 years and it's still on there, do not close it. If you close it, it will hurt your score. It will bring your score down. So just leave it inactive on there. I mean, the best case scenario, if you have several credit cards, to spread out your debt, make it so that your balances stay low, and they stay active. Because if you have a credit card that's showing a 0, you don't get any credit for having that card. It's inactive. It's not showing that you're using your card responsibly, and that will affect people's score. So one of the things too is if you do have several credit cards, you want to make sure that you keep the credit card balances around, I've heard 10, I've heard 20%. Keep it around, 10, 15, 20% of the credit limit. And that is where you're going to see the biggest boost in your score. When you start getting over 20, 30% of the credit limit on there, it'll start suppressing your score. It'll start bringing your score down, and they'll say you're utilizing too much of your debt or your ability to borrow.
Okay, that's good. Good. So what about charge-offs? Is that a good thing, a bad thing?
Well, charge-offs actually, they'll show up as a collection, so they're still going to hurt your credit score. Charge-offs is something the company does, just they're giving up basically on collecting it, and they just charge it off their books. We don't have to count the collections that are charged off on your debt to income ratio, so that is a good thing. However, it's just like a regular collection. It's still going to hurt your score.
Yeah. So what about those companies that say, we'll help you fix your credit score? Is those a good thing, or is that just somebody making money off you to not really improve your position that much?
So you got to be really careful about who you use for credit repair. We fortunately do have the opportunity to work with a reputable company called Home Loans Assist, and we don't get anything from it. We just use it as a resource. The reason I like that company is because I personally know their team. I can pick up the phone if a borrower is having an issue, and they will jump on it immediately, make sure that they're satisfied, the customer's satisfied. They don't want to lose lenders as referral partners. There are some out there that have a bad reputation of just taking your money and not doing anything. I don't want to name any names. If you want to reach out to me personally, I can talk to you about it, but I don't want to name them on this video. But there are a few that we found that people said, yeah, I've tried this company. They're the biggest in the nation, but they did not help me at all. So you want to be really careful about who you use for credit repair. Now, I will say that in some cases, it is the best option because, yes, you're paying monthly to have them work on your credit report. But if you think about it, you will save hundreds of thousands of dollars throughout your lifetime by having a higher credit score. And if that's the only way that you can have somebody advocate for you to help you remove derogatory things, because they know all the laws, they know all the policies that these companies must follow, and they will work on your behalf to have them removed. They'll also help you with tips on what to do to, create positive history. And that's where I've learned a lot of my advice that I give people about credit repair. But if you think about it, whenever you get insurance, they pull your credit report. So your premiums are going to be higher if you have a low credit score. Your interest rate on a home is going to be higher if you have a low credit score. Anytime you buy a car, your interest rate is going to be higher if you have a low credit score. So if you can get that credit score up, that small investment that you make to repair your credit is going to save you hundreds and even thousands of dollars throughout your life.
that other question I have is, if someone's shopping loans, shopping for a mortgage, and they go to different people to see what packages they have and everything, everybody's going to pull up their credit card. Are those going to be hard hits, soft hits? Do those make a difference? If you get to the fifth lender and you like what they have, are those other 4 hits on your credit report going to make your score worse, or is that an understood thing and it doesn't make any difference?
That's a great question. Of course, we don't want anybody to go anywhere besides interlink mortgage, right? But we understand that people do shop, and what we've experienced is a mortgage pull will affect your score sometimes about 2 to 3 points. Now, anytime you have your credit pulled, it is a hard pull on a lender side, and also a auto. They make a hard pull against your credit, which means it'll show up as an inquiry on your credit report. Those will start bringing your score down, and they're on there for 120 days. So they don't stay on there indefinitely. They're on there for 120 days, and then it'll fall off, and it should raise your score. You do want to be careful. Yes, you want to be responsible and shop, but at the same time, you want to be careful. Don't have it pulled a bunch of times, because it will affect your score. We have heard that if you have, for instance, if I pull your credit, we use a third-party company called DataFacts. If another lender uses the same company, a lot of times that will not show up on the inquiries for like 30 to 45 days. So if you do it pretty quickly, there is a window that they say that they will not show up, or it won't affect your score. I don't know that for a fact. I just know from experience that I've been told that if you have them pulled pretty close together in a small window, it's going to have less effect if you have it pulled and then wait a while and have another pull and another pull.
Okay. So if someone came in and sat down and you were going to coach them through improving their credit score, what are can you lay out the first 1, 2, 3, maybe 5 things that they should do? How should they attack it? What order? What should they do first?
Well, the quickest and easiest thing, obviously, is to make sure that you have some type of revolving credit. So if they don't have revolving credit, or they don't have maybe just one, we would encourage them to probably get a secured credit card. So the secured, they don't pull your credit to do that, so you don't have an inquiry against your credit. One of the other things is, if you know somebody like a husband, wife, or spouse, significant other, a parent who has great credit history, you can ask them to add you to be an authorized user on the card. You don't have to use the card. And I can understand why somebody wouldn't want you to use their card, but you can be added as an authorized user, and you actually get to benefit from their credit history and their positive score. So that is something that we've talked to people about. We also look at their collections, and we tell them, hey, you can call and see if they will work with you, but do not pay your collections unless they will agree in writing and give you something in writing that they will pay to delete it. And a lot of times it's just going to take time. So if you have a lot of derogatory information on there, lates or collections, or certainly a foreclosure, bankruptcy, then it's going to take some time to build positive history that will offset that negative history. So a lot of times people ask all the time, well, how long is it going to take? Well, that's the million-dollar question. It just depends on how much negative stuff that you have on there, how disciplined you stay throughout the process of trying to rehab it. And a lot of times it's just an education thing. People just didn't know or aren't aware, and once they're educated, they can start working on it, and it does go up quickly. I will say this: if you have no credit history, so no derogatory on there, you can start developing a very good score quickly, because when you take out a credit card, they are required by law to report once a month. So each month they're going to be reporting, and you will start generating a score within a month or two. So that's something. Something I want to say though, Sherry, before we get off of here, we always advise people away from debt settlement or the debt consolidation. And here's what we've learned about that. So these companies, they're advertised on TV all the time, and they say, hey, we will settle your debts for less than you owe, and it's a great thing. Well, what happens is they say, stop paying your bills. They'll ask you which credit or trade lines you want in their program, and they'll say, stop paying them, we'll take it over. So what they do is they go to these companies and they start negotiating. Most companies don't want to negotiate because they want their money. And so a lot of times what happens in that process, it takes 30, 60 days for them to finish the negotiations. Well, guess what? They hit your credit report with a 30-day late or a 60-day late. And when you sign up with these companies, you have to agree that you're going to close those accounts once they are settled. When that happens, that's another hit to your credit, so it's going to tank your score. So you want to speak to an experienced lender. You want to speak to somebody that can advise you against doing that, unless it's just an absolute last resort. I would not do debt consolidation if possible.
Good advice. So back to, if someone has zero credit and they start using a card, how many months would it take to make them be able to qualify for a mortgage? Like they get a gas card or they get on mom's card. Is it 3 months? Is it 6 months? Is it a year? How long do they have to show?
Yeah.
Some kind of
so one, again, it depends on how much you have. So if you have 2 cards, it's probably going to go a little faster. If you have the 1 card, I would say probably 2 to 3 months, because they have to report each month. And so that's going to start generating a score. Now, obviously, the more history you have, the greater your score is going to be. But I mean, again, if you're starting at 0, it's not going to take long to start registering a score.
Okay.
And I don't think we really talked about it. We did talk about it last week, kind of what the minimum credit scores are. FHA requires, a 580 credit score. Conventional is a 620. So a conventional loan, traditional loan is conventional loan is 620. USDA is 640. And then VA is 600. So you got to be somewhere around the 600 or mid 600s to qualify. And that's why talking to a lender is the best thing to do first, so you can figure out which loan program is best for you.
How much does your score have to go up to get you a better interest rate?
So I'll just use conventional for an example. So conventional works off a 20-point system. So for instance, the best, anything 740 and above, you're in the same pricing. You're in the best tier, the best pricing bracket. And then it drops down to 720 through 739. You're going to be in a little bit higher interest rate. So usually about an 1/8 of a higher. We've been watching the market, and if you look at it, it's probably about an 1/8 to a quarter. And then 700 to 719, and then each 20 points your score changes, you will start seeing a hit to it. Now, FHA and VA are much more lenient on their credit scores. You can get a pretty good interest rate and be in the 600s, mid 600s, and things like that. So that's just a kind of generic overview of how it will affect you on a conventional loan.
Okay, so let's see. So the time it takes to fix a score just depends on all the things that you have. It's very variable. It can take quite a while. Let's see. Trying to formulate that question. There's no hard and fast rule on it. It's best to start right now. Call a lender, call somebody, get some advice, and start working on it, because you never know when you might need that credit. One other question. What about there are different credit cards or cell phone company or different things that accounts, like for example, I have an Amazon American Express, right? And they will check that they show up as checking my credit periodically. It just shows up there in my report, even though I'm not asking for more credit. Use it just a little bit and pay each month, but they keep checking it. What is that? And is that a bad hit, or what is that?
No, so credit cards will use, like I have a Discover card that uses a FICO score. So each month it'll give me a score. I do caution you that these FICO scores, or like Credit Karma is a popular one that people look at. Those are soft pulls, so they do not affect your score. However, they do elevate the scores. And I have a theory behind that. I don't know if it's true or not, but like Credit Karma, it's a free service, but guess what? They advertise credit cards and loans and all kinds of things on their website. So they benefit by elevating your score to make you feel more confident in taking out more credit cards and more loans and things like that. So I think that's part of that little game they play. But we have people all the time say, hey, I checked my score on Credit Karma and it's a 750. And then we'll pull a hard pull and it may be below 700. And they're like, what in the world? And it's because there's a difference between a hard pull and a soft pull. And again, I don't know what algorithm they use. I do know that like Credit Karma only uses 2 of the bureaus, not all 3 of them. But the FICO score is its own, like Experian has its own algorithm that people can use. I think Capital One uses an Experian credit score and things like that. Those do not affect your score. So you can look at those all day long. It's a soft pull and it won't hurt you.
Okay, and another question, even if your credit score is okay enough to get you into a house, isn't it a good idea to pull your credit score once every year or two and make sure that there's nothing that doesn't belong to you maybe on there, or any mistakes, or any old things that you can get taken off by calling people and writing letters and that kind of thing?
Right. Yeah, and we've heard the majority of credit reports out there do have false information on them, and by law, you are allowed to receive a free credit report once a year. So you can look at. There's a website. I can't remember. I think you have it on your worksheet. I don't remember the website, but it's a free credit report, and you can pull one. It's free of charge each year, and just take a look at it and see if there's any false information on there. For instance, I have the same name almost as my dad. He's David Raymond. I'm David Mitchell. And so some of his stuff actually was on my credit report. So you want to be aware of that. And you can call them and get it removed and, just prove that that's not yours, and it won't affect your credit anymore.
Yeah, I talked to a guy a couple of years ago who's not all that savvy in these things, but he pulled his credit report because he was wanting to buy a house, and he had never done that before. Turned out somebody had his social security number and had totally ruined him. So it's definitely an important thing to do, to look at, to make sure, in this day of fraud and people get into your business. Really
Absolutely.
important.
Yeah, most people don't even know what their credit score is. Most people have never even looked at a credit report. And a lot of people don't have any kind of credit monitoring service. Sometimes you can get a credit card and get a free credit monitoring service. So those are things that will alert you if something happens like that. But there is so much fraud out there, especially during the holidays when you're buying online. There's so many people out there that are stealing your information, and you want to make sure that you're keeping on top of, especially if you plan on in the future buying a home or, buying and financing anything. You want to make sure that you stay on top of your credit score.
Okay. So I just want everybody to know that we're going to find that site where you can get your free credit report, and I will post that on the replay. This will be on Facebook, and so just look for the post again on my realtor page, Sherry Uncle's Realtor, or Mitchell will probably post it on his page too. But we'll have that website where you can go to get your one free credit report a year. Any other advice? Anything that I've left out and haven't asked you? Anything that you've thought about while we've been talking that would be good information for everybody?
Like I said, the best thing to do is just speak to a lender. Whether you're going to buy in the next month or two, or you're going to buy in a year, it does not hurt you to, apply and take a look at your credit report. There's no cost to do that. And you can talk to a professional like myself, and we can kind of help you, know where you're at. And then your credit report is good for 120 days. So as long as you purchase within 120 days, we wouldn't have to pull your credit again. It may be to your advantage. We can look at things and say, hey, you can lower these balances on your credit cards. You maybe can get a secured credit card, and we can do, we have the ability to do rapid rescores. So if you need that score up quickly, you can get a higher credit score pretty quick by doing those little tips, and then get a much better interest rate, or help you to qualify for a loan quickly. Or like I said, if you have some time to work on it, we can help you walk through those steps. And if it's bad enough in the sense that you have so much derogatory and not a lot of positive history, you can get referred to one of these credit repair companies. We can talk you through that. They'll do a free consultation with you, and just let you know what you can expect through the process. And it may be a great option for you.
Good deal. Well, thanks so much for sharing all this. We've actually got a comment today that we have good information. So thanks, Janika. I think this is going to help a lot of people. I have a whole ton of people I'm going to send this to just to make sure that they see it. I think, with interest rates so low, it makes sense to buy a house and start building some equity if you can get yourself into good financial condition to do that, and you plan on being in an area for a while. Another thing is that, we're overbuilt in student housing, so some investors are selling off their single family residences, which opens an opportunity for first-time buyers and people who are downsizing and things like that. So all this kind of market breathes us in and out, and we're coming into a time of opportunity. So I think pay attention to your credit report and clean it up right now.
Absolutely. And like I said, the most important thing is just to talk to somebody that you can get to know and trust. And that's what we focus on, doing face-to-face if possible, even in this COVID environment. Obviously, we don't have to do face-to-face, but you want to speak to somebody that you can hold accountable and that you can trust through the process. It's not going to take advantage of you. It's going to give you good information. And on the front end, there's no cost to it.
Right. Okay. Well, thanks so much for being with us today. You want to tell everybody how they can connect with you?
Absolutely. You can connect with me. My personal cell phone is 936-852-3525. You can check out my website at aggielender.com.
And I'm Sherry Eccles again with RE/MAX Bryan College Station. My cell phone is 979-492-0101. And my website is sellwithsherry.com. Y'all have a great day. We'll see you next week.
Bye.